Good afternoon, everyone. You've tuned into the 1:30 edition of Market Fatafat right here on ET. Now, let's take a look at the markets before, of course, we kickstart the show. And well, not bad at all. We are inching towards the 10,500 mark. So very impressive. In fact, we've surpassed that mark as well, attempting to claw back from the deep losses that did transpire in yesterday's trading session. The small cap index as well has managed to claw back into the green, 0.2% higher for the small cap index. But the mid cap index still languishing down by about 0.25%. The energy pack, that's where most of the pressure is coming in. In fact, ONGC, HPCL, all of them are losing. But find out what's up with Tata Motors. We have Abhinav Das in conversation with the CFO on their Q4 numbers.
The six cylinders being JLR, CJLR, CV, PV, Tata Motors Finance, and what I call as net debt and others, all others put together. I think, let me answer your question directly in terms of JLR. I think it's an area where the demand environment has really affected them, and because the demand environment having affected them, particularly in the UK and Europe, that has caused a performance challenge as far as delivery of numbers, volume growth.
And that's your core market.
Yeah, absolutely. No, we are well spread out. We are about 20 across the board. But a home base of UK being 20% and UK collapsing because of diesel, Brexit, challenges on diesel taxes has caused the challenge there. And that volume growth that got delivered because of that has resulted in their operating leverage going off. And that is what you see as an EBIT number. Rest assured, their contribution margins are pretty healthy. There's no problem as far as the brand and the contribution margin is concerned. As far as where they have lost out, and this is not a story of this quarter alone. If you see over the last 2-3 years, last 2-3 years, where if you look at one area where JLR, we are really keen that they step it up, is the operating leverage part. And you would notice that being called out explicitly, be it in Ralph's statement, be it in our own statement, saying that in an environment when you are growing at about 28-30%, you have one kind of muscle that you build. When growth is a challenge at this point in time, then there is other ways to create value, of which the biggest one is operating leverage. And the contrast with Tata Motors standalone is quite stark, where I think there is significant operating leverage that has been geared up here. And given the size of what we are talking about is not something which is like out of the realm of possibility, because it's a 25 billion business generating 1.5 billion pounds of profits. And at such a size business, if you just hold your cost at a sensible level, operating leverage comes in automatically.
Absolutely.
It's a question of what do you pitch for in terms of demand, and then what do you deliver against it. I think therefore we are mentally looking through all these aspects to ensure that we are realistic in our demand estimations and we can create value in all conditions.
But how do you see the challenges play out in the current fiscal? I mean, how does it look like?
Yeah, one is the fact that our portfolio is starting to fill up with plug-in hybrids and mild electrics also mean that all the products that we put which are there with the electric options are starting to sell exceedingly well. And therefore, we have given clear reasons how we want to see growth coming back. Last year, we had 5 new models being introduced. Typically in an auto industry, if you put 5 new models in the same year, it also means it's going to take a bit of time for these models to settle down. So this year, those models get juiced out completely. I-Pace launches is probably the most exciting launch we have done in a long while in terms of the first premium battery electric SUV. And its comparables with the leaders in the electric is just in a different league what I-Pace can deliver. And therefore, that's the next one that comes through here. Range Rover Sport gets their full modular impact as well this year. So we are quite excited, and that is the reason, if you notice in the outlook slide, we have explicitly called out that we expect to see both demand and profitability improve in FY19 compared to last year. And of course, given the pace of introduction, they will be gradually there during the course of the year, but we are clearly seeing that as a call out.
As far as the UK market is concerned, because of the uncertainty over Brexit, I mean, you see the uncertainties play out over a period of time now? I mean, that's unlikely that things will look around over a period of time.
I think the diesel ones will slowly be able to master it, because once we have the electric options available there, that risk starts waning away.
Yeah.
Because the consumer has a choice. As far as the diesel sentiment is concerned, I think it's fair to assume that UK would follow Europe. Slowly the sentiment becomes better. That's as far as the UK is concerned. The one thing that is out there is probably a complete, nobody knows what it is the type of Brexit that will happen in the UK.
Absolutely.
Which I don't think anybody is in any position to give any guarantees as to how it will happen. So let's see how that plays out, and we'll be prepared for that as and when, depending on how it plays out.
I mean, at the end of the day, the commercial vehicle business has seen a very strong turnaround actually. I mean, the passenger business is doing well. But on the whole, they are a very small fraction of what JLR is all about. And that's the problem.
I think it's a myth that the domestic business is not in a position to
take care of the shocks that...
Just take a look at my slide that I put on how EBIT has moved this year, this quarter. What JLR dropped in terms of its EBIT, the passenger business more than picked it up. The domestic business more than picked it up. So therefore, it's a very meaningful presence in the overall scheme of things. Yes, from an absolute perspective, they may not still be there, but from the delta movements, they are very, very strong, what is coming through. And this game has just begun. So therefore, the reason why we are very excited about this whole opportunity that we see in front of us is because we have the very, very large part of JLR navigating turbulence and coming out of it, which will come out of it. The fact that iPace is I'll talk about iPace a little bit more later, but it gives me how JLR intends to play the game. And as far as the domestic is concerned, it is all systems go when it comes to CV, which is why we called it winning decisively. The first year after many, many years, we have won back share. That should say something. And the fact that the cost structures, we have improved profitability, we have improved cash, we have improved shares, we have improved growth. So I think that for me is how a turnaround typically gets classified. And now
but do you see that getting more pronounced in the new fiscal? I mean, the
turnaround
of the CV business?
Absolutely, absolutely, because the portfolio gaps have been filled. One of the biggest, this number that we are seeing out here is after enormous supply chain challenges, because we haven't supplied the full number of vehicles that we would want to supply. Therefore, next year, those things get fixed as we progress, because it's just that we have grown too fast compared to what our capabilities were. And we have picked up shares. Therefore, it's important that we build the capability to do that.
What about competition? What about discounting? I mean, these are also factors that you need to grapple with, right? So,
discounting, I see that. I smile because my absolute VME that I've spent, or percentage VMEs that I've spent this year, which is variable marketing expense, is significantly lower this year compared to last year. So, frankly, discounting, we see that in the market. But we play a far more comprehensive game between the proposition that we offer, the kind of solutions we're able to play. Take a look at why did we put a 6-year warranty out there? It is not there in this market, and that tells you how we want to offer solutions to consumers which are more customized, because each consumer is different and what he or she wants is different. If it is just a price game, just cut discount and go, this is not Tata Motors.
And moving away from Tata Motors, back to Market Fatafat, introducing all of our research analysts and experts joining us on the show. Karunya Rao, Siddharth Bhamre, Poonam Sani, Pankaj Podar, Pranay Jain, and we also have Richard Jain from Angel Broking joining us on the show. Thanks so much to all of you guys for joining in. Let's start off with the very first stock on Market Fatafat. Natco Pharma, mid-cap pharma stocks certainly have been stealing the attention. Natco Pharma, no exception. Numbers were quite steady. Revenues grew 36%. Significant margin expansion, in fact, from 42% to 52%, causing the bottom line to spike up a neat 70% in the Q4 numbers. And that's causing the stock as well to be active, though, of course, it has slipped a tad bit from the day's high. But Adani Power, Richard, that's a stock that's, down and about in trade. What is it that you're observing?
Hi, very good afternoon. Yes, we have seen that the stock has been one of the underperformers since last few months. And in fact, even if we see the stock has not performed even when the mid-cap index or even the other stocks within the sector were going up. So as of now, I think the trend still continues to remain down. There are no signs of any kind of reversals on the charts. Also, we have also been getting a lot of queries from the retail clients that who are looking for bottom fishing just because the prices have moved below 20 rupees now. My advice would be to clearly stay away from such theories where just because the prices have gone below 20 rupees, one should look at any kind of bottom fishing. Unless you get any kind of reversal signs, one should clearly avoid this stock and one should not create any long position there.
Avoid bottom fishing is the clear verdict from Richard Jain. Karunya, Jain Irrigation, what is it that you're observing there?
Well, The winning streak that Jain Irrigation had been posting has clearly come to a screeching halt, because the numbers have been quite impressive, but the street somehow is probably booking some amount of profits, because we saw the stock open a fair bit above the break-even point, but those gains have completely been reversed. We saw good margin, good EBITDA expansion of 10%, profits also grew 20%, top line also grew 25%, but it was the margins front which probably seems to have made the markets a bit unhappy about the company's performance, because margins were compressed.
Okay, moving on. ONGC Pranay Energy Pack is in focus and down in trade.
Well, yes, earlier it had been weak because of the street buzz that the finance ministry may ask the company to sell crude at lower price, or come up with a mechanism to basically cap the realization gain given the rise or rally that we've seen in crude oil. And now we've heard sources telling to PTI that government is considering implementing a windfall tax, which would obviously be achieving the same thing, basically capping the realizations or the net gains for the company, which is why the stock is down about 5% and near 8-month lows.
Yeah, deep losses seen on ONGC. Moving on, Pankaj, Jet Airways, certainly Q4 numbers weighing in on this stock.
Right, if you look at Jet Airways, the stock is down and out today, and it's on the back of numbers with 1,000 crores loss that they have posted. In terms of EBITDA, it's not looking that good for the company. The con call is stated at 4 p.m. today. A lot of questions regarding why maintenance costs were on the higher side.
It's called that we definitely want to tune into. Ruchit, V-Mart, we're seeing good momentum over there. What is it that you're observing?
In fact, if we see the positional charts, then the rally in the stock started in the month of January 2017, when I think the prices were quoting somewhere around 500, 520. Since the post then, since last 1.5 years, the stock has given stellar returns, and from 550 it has rallied up to 2330. The momentum readings due to this sharp move are now in overbought zone. The monthly on the monthly charts, the RSI is trading somewhere around 92. So we should see some sort of time correction over here. I'm not expecting any price correction, mainly because of the trend is quite firm. The moves have been supported by good volumes, and the corrective moves have been on the back of very low volumes. So I think if one has about medium-term perspective, at least 6 to 8 months, then they should continue to hold the stock. After a good time correction, the stock should again resume the uptrend, and it should keep giving good returns over a medium-term perspective.
We're also expecting the Q4 numbers over there, but moving on, Poonam, Sun Pharma, it's a good day for that stock.
So in fact, Mubina, if you look at Sun Pharma stock, it's up in trade, and results are going to be there tomorrow. Taro numbers are already out, and the Taro numbers have been slightly better than expected. However, standalone results are likely to be slightly weak, and besides that, US pricing pressure across the board on the pharma stocks thus continues. So watch out for Sun Pharma results tomorrow.
And stock that's not doing well, Tata Motors, Karania, big losses seen there.
Yes, very disappointing set of numbers in Q4. India business, however, performed very good this time around, but JLR seems to be weighing in on the stock price as well. JLR in the past has also been responsible for the crack in the prices. We've seen the stock crack about 25% so far this year, and even the management commentary, despite being very upbeat on the India business, has not been able to give any relief on the JLR front.
Okay, AB Fashion, meantime, stock number 9, ET reports that Samara Capital may be in talks to buy its retail unit, that's more, for a price point of 2,500 crore rupees. We're talking about due diligence being almost completed, the stock higher by 2.2%. Siddharth, just dial out of F&O ban.
Well, yes, it's out of F&O ban. We are seeing rollovers taking place because next week would be expiry. 21% rise in open interest means rollovers are, at a high level at this point of time. We are also seeing that yesterday's cost of carry was significantly negative. That is recovering, and long positions are getting added here.
And that's just dial for you. But meantime, stock number 11, Pranay, HPCL, another day of red for that one.
Yes, given all the talk around how government is going to reduce the excise duty on the fuel, naturally it has to pass on the weight of that to the OMCs. They've, as it is, been weak and underperforming because of the risk of looming subsidy share burden on them, which was not levied in Q4. But that is something what the street is expecting that the government could do, which is why the stock has actually continued to decline after the results. We saw the GRMs miss as well as the miss on the marketing margins, and the stock has come off nearly 25% from its recent highs.
Okay, that's HPCL for you. But Pankaj, PNC Infra is certainly reacting to its good set of numbers.
Right, so PNC Infra is reacting to its numbers. The stock is up around 3 to 4%. In terms of margins, it's been a surprise with a 110 basis point increase in the margins. And if you just look at what's happening with the execution, that was also pretty strong. I think NCC numbers have just come in as well. They're also looking pretty strong, and that's why you're seeing this sort of a move.
And another stock that's seeing a good up move is Sobha. Poonam, what is it that you're witnessing over there?
Well, pretty much a good up move. The stock is up close to around 8% in the last 2 trading sessions itself. We did see good results coming in Q4. Edel also has a buy on the stock with a target price of 668. In fact, Edel does mention quite a few positives, stating that they do have a robust launch pipeline. Also, if you look at their overall market share, they're going to gain that. They also do have a fairly diversified land bank, and their operational cash flows are also seen to be improving.
Okay, Sobha 3.5% higher. But moving on, Pranay, Grasim, the Q4 numbers were released. They were just about okay, but the stock's tanking today.
There aren't any great growth triggers in the near term, which is why brokerages like Motilal Oswal have maintained a neutral stance with the company. And as a result of lackluster numbers as well as absence of near-term growth triggers, the stock is weak right now. It's corrected the most, in the last 3 months. Today, this 3% fall, and is now trading near 11-month lows.
All right, that's of course the stock price of Grasim, but Siddharth, Tata Motors DVR, just like Tata Motors regular stock price, tanking in trade.
Yeah, but then less than what Tata Motors is doing, 6% for Tata Motors, then 3.5% for DVR. If you look at DVR prices, then they are at October 2013 low, which is like almost 5 years, 4.5 years low. But for Tata Motors, prices are at Feb 2016 low. Now, statistical correlation study between the two points out that the downside for DVR would be much lesser than Tata Motors, and upside can be more. So hence the DVR is seeing lesser shorting taking place in today's trading session with lesser volumes compared to Tata Motors ordinary share.
Okay, interesting perspective there. Relatively a little more resilient compared to Tata Motors regular share price. But Pankaj, United Spirits numbers expected today. This one's up ahead of that.
Right, Mubina, as we were just seeing, there is a sharp fall in United Spirits, 3,183. That's the number that you're seeing, down about 0.9%. So that's what you're seeing in terms of a move right now for USL. The numbers are coming in today, and most likely the numbers should come out post-market hours. And if you look at the numbers, margins are expected to expand, volumes are expected to go up.
Okay, and just a bit of a choppy move seen over there. United Spirits giving up the earlier gains, now down in trade. But Richard, Indiabulls Housing Finance, it's declining more than 2% today in trade.
Well, in fact, if you see last 1 month, the prices have shown a corrective mode itself. As of now, the long-term average support for the stock is coming around 1,060. But since the momentum readings are in oversold zone, we could see some more volatility coming in the stock. One should avoid taking any fresh trades over here. When it comes to 1060, if we get any kind of reversal patterns forming there, then I think one can to review this one.
All right. That's Indiabulls Housing for you. But moving on, KPIT Tech, Karnia, a lot of these mid-cap IT names have not only been doing well, but the quarterly numbers as well are pretty good.
Yes, and that's exactly why the stock is buzzing today in trade. In fact, it touched a fresh 52-week high. Within the last 3 sessions odd, the stock has rallied about 7%. Good numbers report by the company. We're seeing a good expansion. The margins 13.3% versus 11.1% QOQ. Profits have grown more than 20%. EBITDA has grown 27%. So clearly, mid-cap space looks like that's the place to be given the kind of rally we're witnessing.
Yeah, and the guidance as well, decently good. Dollar revenue growth of 8 to 10% certainly is no mean feat to achieve. Moving on, Imami, Richard, is seeing some good gains today.
Well, if you see positional charts, and since last 1.5 years, prices have rather traded in the range of 1,000 to 1,250, 1,300. Now the prices are trading near the lower end of this range, which indicates that the stock is trading near its long-term support. Also on the monthly chart, the 200 months moving average is coming around 980,000 levels itself. So I think just because the stock is trading at its support area, that's why we are seeing a pullback move. Traders with the positional view I think should go long at current levels, keeping strict stop loss below 980 for a pullback move.
And in fact, just as we speak, in the last couple of minutes, we've seen weakness come by in Imami. So it looks like it's halted that gaining momentum for the last 2 trading sessions. Now, in fact, it's a little lower. But Bharat Forge, meantime, is stock number 20 on our radar. Looks like Donald Trump, after eyeing metals, after eyeing steel, aluminium, and even, in fact, pharma, he's keeping his eye out on the auto imports. He's mulling tariffs on car imports, and that is something that's got some of these companies like Bharat Forge and even a Motherson Sumi reeling under pressure with the fear of these tariffs coming in, which will of course hit these companies that do have a high exposure to countries, of course, like USA and even Europe, which will indirectly be affected by these import tariffs. So you are seeing significant pressure come by on Bharat Forge. Poonam, Dilip Bilcon, meantime, as well, is seeing some selling pressure come by.
That's right. In fact, the stock is down to a 2-month low. It's down nearly around 19% just in about 2 weeks odd. Do know that they are one of the companies which do have a stronger balance sheet with a lower debt equity ratio and also good order book and excellent execution. However, recently on BSE, they have stated that their promoters have gone ahead and pledged the shares in favor of RBL. However, this seems to be an interim arrangement for 5 months until certain projects reach financial closure. So I'm not too sure if this is the reason why the stock is tanking. The stock definitely under pressure. Nomura, however, has a buy with a target price of 1347.
Okay, result candidate GAIL, meantime, numbers are not expected to be that bad, but the stock's tanking, Pranay.
Yes, it's actually for the same reason that the stock is weak. Perhaps the windfall tax, which is expected to be levied on oil majors like ONGC, could also come to gas major GAIL, which is why the fact that its results, which are expected today, where Petcom segment is expected to aid the profitability, that's not really helping cheer up the stock right now, which is why it's down about 1.5%.
Okay, under pressure, GAIL. Poonam, Repco Home Finance, what is it that you're witnessing over there?
Well, the stock, if you look at it, it's consolidating in the range of 550 to 600 rupees per share. We did see healthy Q4 results. Margins have expanded 20 bips. Disbursements up nearly 29% quarter on quarter. Asset quality has improved partly on account of seasonal trends. However, management commentary also seems to be fairly robust. They are expecting further growth for them. They're also seeing that, or eyeing rather, to bring down the GNPAs to down to 2% versus 2.8% now. And they're also planning to reduce the ticket size in terms of the lab book. So probably good. There are better times ahead for Repco Home Finance.
Okay, that's what the hope is. But for now, the stock is down by about 2.25%. Siddharth, Voltas as well is down in trade. What are your observations?
Well, in Friday's session, stock corrected substantially after a gap down opening, Mubina, with a record volume. And then next 2-3 trading sessions, it was consolidating. And only when people started feeling that the worst is over for the stock, today it's correcting on a very high volume again. Volumes have already crossed 2 days volumes, and clearly there is some formation of short positions as well, clearly suggesting that there is some more downside left for the stock.
Okay, and one stock that really is standing out today in trade is Kaveri. See the big bulk deal over there, Pankaj.
Right, so we've seen a big bulk deal coming in, and really after a long time a big institution seems to have bought into this. Monish Pomeroy, one of the well-known value investors, Pomeroy Fund, has bought a decent stake in the company. The stock has been buzzing since morning despite markets or mid-cap markets not doing that well.
All right, moving on. Richard, we flagged off Bharat Forge, Motherson Sumi as well, tagging for a similar reason. What are your observations?
In last 2 trading sessions, if we see the sell-off post, the results were out, have been backed by very high volumes. And the price is now close to trading near its long-term support of 300. So 300 would be the crucial level to watch out for traders or investors. I think even on the weekly chart, the stock has formed a head and shoulders pattern, and if we see closing below 300, then I think the selling pressure could increase in this. So if anyone is still holding any long positions, then they should keep a strict stop loss below 300 in Motherson Sumi. Fresh long should be avoided because of the volumes that we have seen during the recent sell-off.
Okay, that's Motherson Sumi. Karunya, Eros International reacting to its Q4 numbers.
Yes, reacting and how look at the kind of rally the stock is witnessing. It snapped the 4-day losing streak on back of the fact that the profits have almost doubled this time around, coming in at 59 crore rupees versus 32 crore rupees. Revenues have also grown a fair bit, more than 30%, and that is exactly why the street is giving a thumbs up.
Yeah, but what the street's not giving a thumbs up to is Castrol, down by about more than 2.5% in trade. Ruchit, what are you picking up over there?
Well, if, in fact, we see last 1 month chart, then the prices have corrected from around 215 to 162 now. So the trend no doubt continues to remain negative. As of now, that stock is trading around its support level, long-term support, but unless we get any kind of reversal signs, I think traders should avoid any kind of bottom fishing in this name. Existing long positions, existing short positions, if any, should be held on keeping a trailing stop loss method, and 168.69 is the near-term resistance, which should be stopped on existing shorts.
Okay, and finally, last two stocks. Godrej Industries is the last one, or the second last one rather, reacting Not so much to its numbers, it's down by 3%, but the numbers of course were not any cause of concern. We had double-digit top-line growth, the margins as well expanded significantly from 7.5% to 13.4%, causing the bottom line as well to spike up by a good 4.5 times from the corresponding quarter. But the stock has found itself under pressure, though of course off the day's low. And finally, Siddharth, Infosys on your radar. In fact, it's one of those stocks that's managing to hold up the Nifty.
Exactly, and if you look at the contribution, then it's IT names which are taking this market higher in today's trading session, apart from telecom and some pharma names. Stock is heading towards its 2 years high, and if it moves towards or it is already above its 2 years high, and if it moves 3% higher from current levels, then that would be an all-time high closing for Infosys. So clearly this is one large cap stock which is providing a lot of support to Nifty in a falling market.
Okay, there you have it, the 30 stocks that you need to know for this trading session. Thanks to all of you then for joining in and helping our viewers out with that. Richard, thanks to you as well for giving in your key observations on stocks. We will wrap it up in this edition of Market Fatafat. Thanks for watching.